Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is November 1st, 2024. I'm going to focus on the New Zealand versus US dollar. I haven't spoken about this currency pair much this week. Why? Because it's been up and down, up and down, up and down in fairly narrow trading range. So it's time to face some music and take a look at the charts, see what it's going to say about next week's trading. I don't expect it to be the same next week, so let's get started. Starting off by taking a look at the 4-hour chart. If we took a look at the high price for the week and then we took a look at the low price of the week, the range comes between 0.5937, let's call it 38, and let's call it 60. So 60, an even 60 less 5938 is only about 62 pips for the entire week. You've seen the up and down price action that I spoke to. With a couple tests of the highs and really only one low right here. If you looked at even the other low for the week, the range is even less than the 62 pips that we outlined from this high to the low. So not a lot going on here in the New Zealand versus US dollar, hence my intention to talk about it. The other thing that we did this week was that we traded above and below this swing area, so it wasn't necessarily paying attention to anything that was going on as far as technicals, a technical level is concerned. It's something that I watch, and that can be indicative of a misbehaving market or a market that just doesn't know which way it wants to go, and that's reflected in the up and down price action as well. So let's take that as our base case scenario for the New Zealand versus US dollar, that this week traders didn't know which way it wanted to go by virtue of the fact that we did this and traded above and below these levels right through here all week long. So at some point the market decides, well, which way it wants to go. And so the easy answer to which way we're going to go next week is let's just let the price action tell us. So if we do move to the upside and start to see more of this, the next target comes against the 100 bar moving average on the 4-hour chart, and this swing area up through here where we had a number of different, first swing lows, and then we started to have highs right here forming the ceiling. We traded above and below the level, reestablished the level as a resistance level here, and then moved above it and moved to the upside. We moved back to this level a few weeks ago where the price did find support buyers against that level. In trading last week, we traded a little bit above and below before we deciding to sell against this level and move to the downside. So we need to get above both the 100 bar moving average, which is moving lower, and this swing area between 0.6031 and 0.60387. Above that, we start to look toward the 61.8% retracement. That's a broken of this move to the upside at 0.60509, and then toward the middle of the trading range is the 100 and 200 day moving averages, which are up here. The fact that we're below both those moving averages gives the bias more to the downside. That's obvious because we're nearer the lows as well here. But what we can also say is that the last time the price tested the 100-day moving average back here just a couple weeks ago, the market did find willing sellers against that level. So there was that push to the downside, and the market took it and pushed lower. The problem is that we haven't really done much down here at the lows as a market that still figures out what it wants to do. Now, on the downside, what do we have to look forward to? Well, if we put our red box right here and look lower, this low price that we saw in trading this week happened to correspond with this low price right here. Now, it was in another period where the price was moving up and down, but it was a corrective low that came down, and that started this move to the upside, which we never really looked back from. So I give it some credence that we did find some support at the 0.59379, and below that level, we then look at this low right here, which was also another low where once we hit the bottom, both here and here, the price never returned to those levels and pushed to the upside. So it too is going to be a target that I'm going to be looking for on the downside, on further downside momentum. And then we start to look toward this low area right through here, where we had a swing low right here, we had a swing low right here, and this low right here moved below both of those lows, but just by the smallest of margins before starting its move to the upside. So all these places where the market started to make their move to the upside are the levels that we're going to be watching in trading next week. And I can't really make it any more clear than that. watch this box right here and watch the other target levels on the downside and the upside as outlined through this video. Now let's take a quick look at the 1 hour chart to see what it's telling us. And what we can say on the 1 hour chart is that the trend to the downside has been doing what a lot of the other pairs have been doing as well, staying mostly below the 200-hour moving average. Now today, the price did move briefly above that 200-hour moving average, but the price again rotated to the downside, and we are closing below. Or it looks like we're going to close below the 100 and 200. So we have to stay below those levels in order to keep the bias more to the downside. If we start to move above the 200-hour moving average with more momentum, then the storyline changes, and we start to look toward this 100-bar moving average, which is also near the swing area that outlined in the 61.8% retracement. All these levels start to come in play on the top side. So watch the 200-hour moving average as a close level of resistance in trading next week. It'll give you a clue, and if it can stay above that level, then it will give you even more confidence to push the price, to correct the price to the upside. Absent that, folks, and the sellers are still in full control. So that's my tactical look at the New Zealand versus US dollar. Good fortune with your trading. Bye-bye now.